Nigeria's President Muhammadu Buhari last Friday signed the 2016 budget with a total expenditure at 6.06 trillion naira. That's the heaviest appropriation since the country's independence in 1960. So let's get the perspectives of the global analyst community on these particular appropriations. Now I've been joined by the chief economist at Exotic Partners in London, Alan Cameron. Good afternoon, Alan. Thanks for coming through.
Good afternoon.
Yes, 6.06 trillion naira. That's quite a lot of money on the table, isn't it? Talk to us. What's your view about this budget now being put in place?
Well, I think the basic premise of the budget is that you need to stimulate the economy because oil prices are low. And on the surface, there's nothing wrong with that. I think the problem that the market and that some analysts will have with this budget is that it's not incredibly clear how exactly it's going to be funded. So to be more specific, a good part of it is dedicated to CapEx, but we all know that capital expenditure is usually fairly import intensive, and the country's in a position right now where it's very hard to get its hands on dollars. So I think there's some major questions that remain to be answered about how the foreign part of the funding is going to be achieved, given that we don't really have a lot of news on that front. So on the surface, it makes sense, but I think when you look beneath the surface, there's some deeper questions that have yet to be answered.
Aren't there clarity as to how this will be funded? Of course, Nigeria has been recovering some stolen funds. There have been reducing government leakage, revenue leakages, and trying to get a single treasury, single account into the central bank. So do you think there's enough clarity as to where the money is coming from?
No, I don't think there's enough clarity, and all the things that you mentioned are clearly positive. Plugging leakages, recovering stolen funds, all of those things are good, and I think analysts have a good impression of Buhari's track record in that area. But when you come down to it, you just are going to need a lot more money than that. If we're converting things into dollar terms, basically the government plans to spend just over $30 billion. And in the best years historically, even when the oil price has been high, they've collected closer to $20 billion at the central government level. So there's still a good, in today's conditions, $10 to $15 billion, which needs to be funded. And the pace at which we're seeing stolen funds recovered and we're seeing leakages plugged is not enough on its own to close this gap. So we still need to see money coming from the World Bank, money coming from the Chinese, or perhaps from another source that we're not aware of just yet.
So in terms of what the analyst community is thinking about this budget, give us a view. What's the view from your community, from economists, from analysts about this budget, how it's to be funded, what are the options, what would you like to see, since you notice a few things that are not clear in the document?
Well, I think the major issue that most people in the investor and analyst community have is, again, it goes back to the exchange rate. And again, that's what we've gathered from the meetings that we held, that we were attending in Washington, D.C. at the spring meetings, where we know Nigeria was trying to raise money from the World Bank. And our sense is that the World Bank will ask Nigeria to do some kind of exchange rate reform in return for it pledging external funding. And we know that the president is against exchange rate reform. He's come out against it extremely strongly. It's an area of personal decision making for him. So we don't see how these two things go together, and therefore it's hard to put much credibility into this budget until we see how this whole thing works and what the actual priorities are. I'm not sure that I have a good sense of whether it's more important for President Buhari to keep the exchange rate fixed, or is it more important for him to be able to raise external funding for the budget and be able to pursue the CapEx plans which are described in the appropriation bill. So I think, again, that's a major question that still needs to be answered, and there's not a lot of clarity. And until there's clarity on that, I think it will be difficult for people to have a lot of confidence in the fact that this budget will be executed.
A final question, Alan. Quickly, if there are no further clarities, we're 4 months, we're into fifth month of the year, do you think this budget will be able to deliver something, put something on the table in terms of growth for Nigeria, Africa's largest oil producer in 2016?
I think even if there is no foreign funding and they don't manage to do the CapEx that they want to do, it could still be positive for growth. If you look at the recurrent expenditure that's taking place, it's still quite substantial, and we know that that can be funded from domestic sources. So clearly, that will help. And if that is what happens, then it will be very similar to what we've had in previous years, where there's been quite a lot of recurrent spending and a very low implementation rate of CapEx. So in that way, it could be similar. But I think if you look at the name of the budget, it's called a budget for change. And I think that that's what Nigerians expect. And there's a very long-standing goal of increasing the level of CapEx relative to the level of recurrent expenditure. So it would be disappointing if that didn't happen. But if it didn't, it would probably just make it similar to previous years.
Thank you so much for your time today. Alan Cameron, Chief Economist at Exotic Partners in London. We thank you for your time. Okay, let's step into the United States, where the employment data came last week well below expectations, and the global growth continues to slow down. So how are investors looking at the election year and the S&P 500? Voice of America's Channels TV business correspondent Gio Malandrino sat with Stephen Kalajian, who is the founder of the Kalajian Report, to get his views about the S&P 500 index, the elections, and how to invest in this report of unemployment data.
The market sold off following weaker than expected employment data. What does this mean for the market, Steve, and for the Federal Reserve? Because they are running out of options here in terms of an interest rate hike.
Well, the jobs market actually was the strongest part of the economy as of right now. All the data coming in has really been sluggish. Retail sales, durable goods, and our own GDP number, which was reported for the first quarter at 0.5%. So we're really seeing a real slowdown across the board, but the jobs market coming in today was a big disappointment.
So do you think they can raise rates at this point? Because earnings have really been lackluster. Companies are beating on lower estimates, but they're still down year over year in terms of revenue.
I can't see the Federal Reserve talking about raising interest rates. I'm in the camp that I don't see interest rates at all before the election and then even after the election. When you have worldwide slowdowns and then you see our own GDP numbers as weak as they are, and then with today's unemployment number, I don't see the Federal Reserve raising interest rates at all here.
So how do you trade this market going into the election?
Well, basically, you know, the way I always tell everybody, you have to know when to take money off the table. There was a ton of overhead resistance from last year on the overall market, the Dow Jones Industrial Average.
Does that mean we were overbought when you say
we were
resistance?
overbought, and we pulled in about 500-600 points from the high of this year. So people, I sense a significant form of complacency again when the Dow was around the 18,000 level. We had just risen from almost 15-17% off the low, and you know, a lot of people still were very complacent. I was actually calling for investors to really take money off the table up at those levels.
And what about the S&P 500 right now?
Well, there's two key numbers here on the S&P 500, the 2015 level and the 1950 level on the S&P 500. If the 1950 level gets taken out, we reverse the uptrend and go into a negative trend. I don't see that happening right off the bat. The first key number is the 2015 level, where I think investors can look to buy exchange-traded funds like the SPY, the DIA, the QQQs, look to take an advantage of an oversold condition and look for a trade. And then I'll look at it after that.
All right, we'll keep an eye on those levels. Thank you
you
very much, Steve.
Thank you, John.
For Channels TV in New York, I'm Jill Malandrino.
Also, let's stick with the U.S. economy. President Barack Obama says a long-delayed rule requiring the financial industry to identify the real owners of companies will help fight corruption and tax evasion and boost the economy. The Obama administration on Friday issued the Customer Due Diligence Rule in the works since 2012 and proposed legislation meant to prevent criminals from using shell companies to evade taxes, launder money, and finance terror.
The global economy, as many people here are aware, is not growing as fast as it should be. You're still seeing lagging growth in places like Europe, Japan, and now China. Here in the United States, there are folks out there who are still hurting. And so we've got to do everything we can to strengthen the good trends and to guard against some dangerous trends in the global economy. Now, these actions are going to make a difference. They will allow us to continue to do a better job of tracking financial flows and making sure that people are paying the taxes that they owe rather than using shell corporations and offshore accounts to avoid doing the things that ordinary Americans, hard-working Americans are doing every day, and that's making sure that they're paying their fair share. I'm calling on Congress to pass new legislation that requires all companies formed inside the United States to report information about their real owners to the Treasury Department's Financial Crimes Enforcement Network. That's going to help law enforcement better investigate and prevent financial crimes.
The International Monetary Fund has a word for China and the Asian economies in 2016 to 2018 period. We'll talk about that after the break.